Hi, I'm Jordan Roy-Byrne of the Daily Gold, and I'm here at the Metals Investor Forum in Vancouver, British Columbia. And right now I'm speaking with Erick Bertsch, who is the Vice President of Corporate Development at Columbus Gold. And Erick, as we get started, why don't you just give the audience a background of Columbus Gold and your two projects?
Yes, I'd be happy to. Columbus Gold operates in two primary jurisdictions, French Guiana and also in Nevada. And so in French Guiana, we are advancing a 5 million ounce deposit towards a construction decision. We've just announced a bankable feasibility study with our partner. And so a lot of work going on there, and we'll get to that in a moment. And in Nevada, we've got a new discovery on a district-sized piece of property in the Walker Lane Trend. And we've got a number of different resources on it so far, and we're drilling new targets as we speak.
Okay, and let's go to the project in Guyana. And the recent bankable feasibility study, I believe you showed a 18.7% IRR after tax at $1,250 gold. But more important than that, you have a couple ways where you can improve the economics moving forward. Can you quickly discuss maybe one or two of those things you're working on, which you think can improve the economics?
Yeah, of course. The study was a great success. We managed to put together 2.75 million ounces of proven and probable reserves at more or less 1.6 grams per ton. So for the Americas, that's a high grade open pit gold project. The net present value was 370 million US. But as you said, the IRR was just below that 20% threshold that the market likes to see. And we were very aggressive in our timeline with this. For our partner to earn a 55% interest in the project, they had to spend over $30 million within a 3-year time period, but also deliver the bankable feasibility study. And so in the 3 years, we produced 3 resource estimates, preliminary economic assessment, and met the deadline for the bankable feasibility study. That pushed us to the limits for what we could do and where we had to concentrate our efforts. But there are a number of areas for improvement. One is to do a pit optimization where we can get a better handle on how we would go about mining this. That should increase our internal rate of return and our net present value as well. Also, our CapEx, so we can optimize that as well. The certain costing, we got more or less broad numbers for, say, mobilization, bringing equipment and people into camp to build a mine and out. And we feel that those quotes can be better refined and we can bring those costs down. And a third area, we've got 960,000 ounces of inferred resources that are within the pit. And so because they were in the inferred category, we couldn't do the engineering to upgrade them to proven probable reserves. So along with our partner, and we're splitting the cost on this program, we'll be working with Nordgold to do some infill drilling on those. That'll increase the number of proven and probable reserves in the project, but without increasing the CapEx. That earth was going to be moved anyway. And so that's something that we can do desktop and in the near term with regard to the drilling.
Okay, Columbus is not just a one-trick pony because you have the East Side Gold Project in Nevada. Before we close here, give us an overview of that project. How much gold is there right now and how you're going to continue to move that forward?
Well, this is a very exciting project for us, and we made a new discovery in Nevada a few years ago. This is a district-sized property. US 95 highway passes through the southern claim boundary of the property. The northern part has a power line. Our original target is now the original zone. We have about 721,000 ounces gold equivalent there at a 0.63 gram per ton gold equivalent grade. And the deposit's open to the west, to the south, and at depth. So we'll be preparing programs to expand that drilling program and hopefully add a few more ounces there. The southern part of the property, our exploration team in the late 90s put together what is today considered a historic resource, but 273,000 ounces at 0.8 grams per ton and closer to surface. surface. So we're planning to do a little additional drilling to expand those resources and upgrade them to 43-101. So about 1 million ounces right now, inferred and historic. We're drilling a new target in the center of the property, target 5, identical to the original one. And then we've got 4 or 5 others after that as well. So lots of work left to do.
Okay, Robert, thanks so much for being here.
Thank you.